Obviously you can have a bank account while sitting here in India. So you don't, if you want to scale and if you want to see that you have a long-term safe game. So I am a chartered accountant in India and I'm a licensed CPA in the Washington state of the US, the co-founder of US India CFO. So just imagine the pie which is there, we can fill, we can achieve as Indian frames can achieve over there in terms of the US services imports. Now, one thing is very clear, we can achieve everything, penetrate in the United States through this, but the right structuring is very important. So as businessmen, we can't just be targeting the top line, the revenue numbers. We have to also take care of the structuring so that we ultimately save, in terms of taxes. We don't fall down in terms of wrong, filings or incorrect filings. So that is why it is very important we have a correct structure in place. So I'll keep, on the fourth box, I'll keep it for the later discussions and not discussing in detail right now. Now, why US is expanding? As you know, post COVID, the scenarios have completely changed. Now things can be done more virtually, more, just sitting right here back in India. So, and in US is again, China plus one policy, and they are again depending highly on India. A lot of GCCs are coming into India. GCCs are the global capability centers. They are coming inside in India because of the obvious reasons. India has a lot to offer to the United States. So, why US should be very clear in our head, and absolutely by seeing these numbers, it should be, and it is very clear that US is the next big thing what the Indian service exporters can target, and there's a big shoe to fill in. There's a big target to achieve over there, but we have to do it correctly. Now, post asking or post giving a clarity that why US is important or why you should expand in the US, I now the foundational things are clear that why US. Then I ask these four questions, or these are the foundational pillars for the US entry for everyone: established business, listed business in India, maybe a freelancer from India, maybe a family owned business from India. So these are the four common questions, four common pillars the businesses must look into before making a US entry. Now I'll take these up one by one. One of the most important foundational pillar is type of entity. Then second is the state selection. US, as you know, United States of America is a union of 50 different states. So we must be very, careful while selecting the state we want to get into, we want to register into, because every state has different things, to offer, different taxation structure, different payroll structure, different filing structure. Everything is different for all the 50 different states. Third is the shareholding structuring. This is very important in terms of the tax planning, in terms of the future planning. See, you can change the state. You can deregister and register in another state. Obviously, there will be some pros and cons of doing that. But once the shareholding structuring is set up, it is very difficult and it is very costly from tax perspective when you want to change your shareholding. So it is very important we are clear in our head of achieving the right shareholding structure. Then, lastly, and the most important is supply chain. Once the first three things are sorted, supply chain is the next big question, because we are sitting in India, we have to align with India, we have to take care of the taxation, and even if we are there in India and US and any other country, then supply chain plays a very important and vital role in terms of our overall structuring. Now, coming on the first point, type of entity. So we have, most importantly, five types of structure, or the five types of US entity what we can get into. One is the LLC, which is single member LLC. The second is the LLC multi-member LLC. There are more than one member in this. Third is the C corporation. Fourth is the S corporation, and the last is the branch office that Indian businesses having, setting up their branches in the United States. So these are the five type of entities wherein the US entity can be structured into. I'll give you in detail the pros and cons, what you should select, what you should not select in terms of the entity. Now, choosing the right entity is very important for the liability shield integrity. So when we say LLC, this means limited liability corporation. Okay, so you are limiting your liability. The same applies with the C-Corp, but not or may not with the branches or the S-Corps or the single member LLCs. So we have to be very much sure of why we want to select a particular type of entity. Second is taxation. So there are, in India, there is only one, type of taxes, which is straight. But in the US, there are two types of taxation. One is the entity level taxation. The other is the pass through taxation. I'll come to that part as well in the next slide. Then the compliance with the home country regulations. See, it is very important that we choose the structure which is compliant with our Indian regulations as well. FEMA, for that matter, or you can say income taxes for that matter. Plus, lastly, is the goal alignment. Entity structuring is very much required for the goal alignment. So if my business is for profit, let's say I am working for profit, my motive is to earn profit, then LLC might be a good structure. But if I am working, or if I'm expanding to the US for the valuation, for seeking valuation, for onboarding the VCs in the US, then LLC is not the right structure. C Corp can play a different, role in that, and altogether it would be best suited entity type for the organization going for value in the United States. Then state selection. 50 different states, 50 different constitution, 50 different sales tax regulations, 50 different state taxation rules, and 50 different corporate rules, state corporate rules. So you must be thinking that it is very, very complicated. Yes, if you are not doing this correctly, or if you're not planning it correctly. Okay. So in US, there is a concept called nexus. Nexus in sense means the relation what you're having to a particular state. So it is very important to choose the state wisely. In which state my customers are sitting? One important question. In which state I will hire my people in the US? Next big question. In which state I am selling, even if I'm selling online, even if I'm selling the SaaS, even if I'm selling anything, because every state looks a piece of information differently. Okay. So tax efficiency and nexus highly depends on the state selection. So I'll give you an example. In fact, the for profit or for value motive also reflects on the state selection. So let's say if you are eyeing to, raise funds from YC Combinator or any other VC fund in the US, the VCs, the investors prefer a Delaware-based entity. Why? It has own, merits. Delaware is, generally termed as a gold standard state when it comes to the investor preferences. Why I'm saying this? One of the biggest factor is the settled business law. And if you can see, most of the Fortune 500 companies, big companies, always have their home state, the parent state, as Delaware, because of the obvious reason: the state settled laws, the court of chancery, the clear IP laws. All these things are, are supporting Delaware to be the gold standard state. Okay. Then also depends upon our preference about the privacy and the public disclosures. So if you can see, Nevada and Wyoming, these are the two states which are called as anonymous state. If you don't want to, show your hands, show your shareholding, so these states are, the best states in terms of the privacy and the public disclosure policies. So and anonymity remains the same, sanctity remains the same. So these are the state which you can choose for your, depending upon your privacy policies, your privacy preferences. All right. Now coming on to the shareholding structuring. Okay. So entity type we have discussed, state we have discussed. Now the shareholding structuring. This is the another factor which actually, which will have a longest term impact on your business and your business preferences, business structuring, taxation, compliances, everything. First thing is deciding the holdco. Holdco means holding company. Do you want to be a US holding company, or do you want to be a Indian holding company? I mean to say that do you want to be a US parent structure, or do you want to be a Indian parent? Both are both have, different offerings, different pros and cons. I'll give you an example. So let's say if I am working to, I'm working on a SaaS platform wherein I want to raise funds from a US VC. All right. My preference or my choice would be to have a US parent structure. Why? The US investors, the VCs, would love to, because it's very straight for them, would love to invest in the US parent rather than the Indian parent. US laws, US IP laws, US trademark laws are widely accepted across the globe. Okay, so that's why US has its natural preferences, while the investors have the will have natural preference over a Indian parent rather than a US parent. So that's one part. Second is the standalone or an umbrella structure. Okay, my name is Amit Agarwal. I own BNG Advisors Private Limited. Now, if I want to expand to the US, should I own the US company or should I structure this from my Indian entity, BNG Advisors? So standalone means I am owning that entity. That entity is, owned standalone. Umbrella structures, there is an entity above another entity. So there is a parent entity and there is a subsidiary entity. That's an umbrella structure. That is very important in terms of deciding the double taxation strategies, deciding the controlling strategies, valuation unlocking strategies. So that is very important in terms of standalone versus umbrella structure. Second is the ESOP structuring. So let's say I am having an employee base of 100 people back in India. I am targeting to, raise funds in the US. So I have to keep my employees motivated and I want to, share my value with the employees and want to give them ESOPs in terms of the value. So having a LLC will not solve this ESOP structuring issue. The ESOP structuring ask. Having a C-Corp will definitely solve this. But if the Indian parent is holding the value and the US subsidiary is issuing the ESOPs to the US employees for that matter, they will not be able to share the same value what the parent employees will be having. What do I mean here is just understand the scenario. There is a US parent, there is a Indian subsidiary. Okay. US parent raises funds, let's say $20 million they have raised. But will that reflect on the ESOPs of the Indian employees? Yes, this will have an impact because you will be issuing the ESOPs under the global policies of your organization. But let's say if there is no linkage between the US entity and the Indian entity, in that case, US raises the funds. In that case, Indian employees will not have any value additions, value benefits of of the ESOP policies of the ESOPs they are holding in their personal name. So for the ESOP structuring as well, shareholding structuring, shareholding pattern is very, very important. Lastly is the home country restrictions. Now this is very important. So India has, FEMA rules. FEMA was overhauled in August 22, I think, right? What does that say? Let's say if, again, coming back to that example of Amit Agarwal owning the US entity or BNG Advisors Private Limited owning the US entity. Now think that Amit Agarwal, as an Indian individual resident, is owning the US parent, the US entity. In this case, the US entity will not be able to set up its subsidiary anywhere in the world. Anywhere means anywhere, not even back in India. Why? FEMA says that if an Indian individual resident is owning more than 10% or is having a control of more than 10% in any overseas entity, that overseas entity cannot have a subsidiary anywhere in the world. So you have to route your structuring very precisely and very effectively and should be aligning with your future goal. Let's say I don't want to create any US subsidiary, US company's subsidiary in the future. So I am okay owning 100% of the US entity. But if I see that no, in future, I may be required to have establish a subsidiary of the US entity, in that case, this structuring will fail, will fall out, and ultimately will be tax inefficient. And it will be tax leakages on my pocket if I change the structure in the future. So shareholding structuring pattern is very, very, very important. Okay. Lastly, the supply chain. So now we are sorted with the type of entity, state selection, shareholding structuring. Supply chain is another, very much important pillar because ultimately, till now, you have just planned how you will start the US entity. Okay. Supply chain governs how you will run the US entity, how you will run your show entirely in the US and the India background. One important fact is the banking. Obviously, you can have a bank account while sitting here in India. So you don't need to travel to the US to open the bank account for your US entity. Okay. So that these bank accounts, these offerings are called the virtual bank accounts. So and the traditional ones are like the normal bank accounts like BOFA, Chase, Wells Fargo. See that these are the traditional bank accounts. Now, as a friend, as a business partner, I always tell people to initiate your business, to set up your business, you can go with the virtual bank account. There is no problem in that. But if you want to scale and if you want to see that you have a long term safe game, go to the United States, visit the United States, and have a traditional bank account in place. This is a very important factor which I generally consult people, that you be start from India, you can have the bank account, but get the traditional bank account as soon as possible. Not in a hurry mode, but plan for this in your near future. All right. Next is the selecting the tax year. India home country alignment. See, these things are not, there in the Indian taxation system. US offers a flexible tax year. So tax year in India is April to March, 1st April to 31st of March. Default taxation structure for the United States is January to December, 1st January to 31st December. Now, US allows you to select your tax year and change that. And you can do that by changing from Jan December to April March. Why is it important? So, let's say if you are having the Indian parent and the US subsidiary, in this case, you might be required to accumulate your balances, or you can say you have to accumulate the US financial numbers with your Indian financial numbers to give a merged financial statements. All right. Now, US is following Jan to December, you are following April to March in India. So, the Indian auditor will say to you, boss, I need financials written from April to March. Please get me that. So, you have to again rewrite your books, prepare your financial statements again from April to March. So, by selecting the tax year to April to March, you will not be required to prepare double set of books of accounts, double set of financial statements for your US entity. So that's why selecting the tax year is very, very, very important. Next is the tax categorization. All right. So this is again a very important aspect. Pass through versus C-Corp. So let's say consider an Indian LLP. Okay. You and me are both our partners in an Indian LLP, and that Indian LLP makes a profit of 1 crore rupees. What will happen? The LLP will pay the taxes on the 1 crore at the rate of 31.2 percentage. That's it. And that balance money is free to withdraw by me and you as partners. Now, just imagine this LLP is there in the US. We'll consider this, we'll say, term this as a LLC. All right. Now, LLC as a default tax structure is a pass through entity, okay, as a partnership form. What do you mean by pass through entity? That LLC again makes a profit of, let's say, $1 million. As a pass through entity, as a default tax structure, that LLC will not make any tax payments to the US government. What will say? They will issue a document saying that the LLC has made 1 million of profit, 50% is for Amit Agarwal, and rest 50% is for you. $500,000 divided between each of us. We as an individual members, we as members of that LLC of a pass-through structure, we need to file our taxes, pay the taxes to the US government. The onus is on us, the members of the LLC. Now again, US offers you to change that tax categorization from pass-through to C-Corp. What do I mean by C-Corp? That the entity will itself make, pay the taxes and not the members. Okay, again, it is a very important aspect you choose while post your incorporation or during your filings, because once a selection is made, it remains for 5 years, and that will impact your runway, that will impact the taxation in India as well as in the US. Mind it. Last is setting up the flow. So this is more nuanced thing, very much technical. Transfer pricing, POEM or PE. Transfer pricing is okay. POEM is like place of effective management, and PE is like permanent establishment. So this is also a very important aspect while you structure your entity. Let's say if an Indian listed entity is setting up a base in the United States and they don't have anyone in the US, zero employees, and everything is running, the directors, the employees are running show from India, and the US entity is earning beautifully. Okay. In this case, POEM and PE rules will hit. What do you mean by this POEM? And so in this case, the Indian government and the US government will say that there is no US entity. This entity is being run from India. There is a permanent establishment, or there is a place of effective management of this US entity is India and not the US. These things are very categorically required. The POEM and the PE thing, once you cross that threshold limit and achieve that threshold numbers, achieve the revenue numbers. So this comes in play at that moment, but it is always advisable to look around this. Why? Because there is a recent judgment of given by Honorable Supreme Court of India in case of the Tiger Global and the Flipkart case. In that, Tiger Global was running the complete show sitting from the US. They have their, a layered entity, a fictitious entity through Mauritius. The Supreme Court of India said, no, boss, this is not a Mauritius company. This is ultimately you are doing the show from US, and the US India treaty, Mauritius India treaty falls apart, and you have to pay the taxes in India. So I've given a good, blog on that. I've given a quick reel on that as well. You can, look into that. So that's why I'm saying POEM and PE rules are very, very important. Now, the transfer pricing is applicable to everyone, whoever is, dealing in the India US structure and making the payments to their related entities. Okay. India and US both are heavily regulated from transfer pricing point of view. In fact, even India requires Indian businesses to file their transfer pricing audit reports along with their income tax returns and all, if it is applicable. Whereas US says that you have to be in check and do some reportings with us. Obviously, there is no audit requirement in the US on the transfer pricing at a base level. Obviously, at a higher level, you might see audits come in play in the United States as well. So, having said that, these are the four foundational pillars for your US entry. You should be sure of first question, why US, why you want to go to the US, and then these four structuring questions should come on board in your mind with your consultants. Very much important. It should not be the case that I go online and file and purchase a plan and go for a single member LLC. That is the easiest path, but that's the most dangerous path what I have observed. And people have paid, taxes. People have, missed their investors coming on board. A lot of things happen if you, don't plan at first hand before going to the US. Great. Now, quickly, let us summarize the type of entity. What is the right set of entity you can have for your business? I've given the bifurcated these five structures on who is, best suited for what is the, high level tax treatment, what are the key benefits, and what are the watch out points for you guys if you are going in any specific structures. Let's say, speaking of the single member LLC, so these are, best suited for the sole founders and the freelancers who just want to, try the US market, or having a US billing currently from India. They do want to change it to the United States, as a billing entity. So single member LLC is best suited for the sole founders and the freelancers who are just starting and giving it a shot. Second is the tax treatment. This single member LLC is a disregarded entity in the US. It has its own, demerits of being a disregarded entity. Obviously, you will have a simpler compliance check in the single member LLC, but disregarded entity has its own disadvantages. This means there is no corporate wheel in between, and ultimately, it's you can term in a layman language, you can term it as a proprietorship in the US. So US government will not see to this LLC; it will see to you for all the taxes, compliance, and stuff. Okay, the key benefits are simple setup. It's a very simple setup. There's no double taxation, obviously, because ultimately it's me or you owning the single member LLC, and there is no structure in between both of us. You have to watch out for the form 5472, pro forma 1120 mandatory filings, April by April 15. So these are the things which you should watch out for. These are simple compliances which you should take care. 5472 is an important form to file, because missing a single 5472 will get you a penalty of $25,000. And mind you, IRS is getting, that is tightening up the regulations, is tightening up the notices and all these days. And then they want to, everyone to comply thoroughly. Now, the multi-member LLCs, these are the best suited for Indian businesses expanding to the US. And the motto is for profits and not for the valuation. All right. So this is very good structure for the businesses expanding for profits motive. Tax treatment as a default partnership, as I told you, it's a pass-through entity by default, termed as partnership. And you can elect, a form via 8832 to be elected as a C-Corp. So you can change your tax treatment from a pass-through to a C-Corp. Key benefits, treaty benefits, India, US, DTAA, a long, a big chapter to be discussed, but I'm not discussing right now, don't worry. And it's a flexible profit share method, the LLCs. It's a very simple tool, multi-member LLC. Obviously, you have to file as a partnership, and then the partners of the members also have to, submit their taxes and pay their taxes to the United government. But it's a flexible profit structure. Just like an LLP, once tax paid, you can bring the money back to your pocket in Indian LLP case. The same way in multi-member LLC, generally, once the tax is paid by the members, it's all free. You can, bring that money back to India. There will be no double taxation on this. So it's a very tax efficient structure for the profits motive businesses. All right. Coming on to the C corporations. So these are the private limited, the limited companies of the United States, C corporations. All right. Now, if your motive is for valuation, as I told you earlier, this is the best route you should get into and good for the investors. The investors prefer the C Corps. Tax treatment, very simple. Just like the Indian private limited company has a 26% straight tax rate, same way C corporations have 21% flat corporate tax rate. Okay. So you don't need to deselect, select the boxes to change the tax treatments. It's a straight 21% for you guys. All right. Key benefits, it's a VC ready thing. The investors prefer this organization method and they are ready to come on board. All right. It's a investor preferred method. Most important flag for C corporation is double taxation. And this is where most of the businesses make defaults or lose their money as taxes. So as a double taxation, what happens is, let's say there is a $1 million profit at the C Corp level. You'll pay 21% flat taxes. Let's say $200,000 you have paid as a taxes. Balance is 800,000 sitting as a profit in the balance sheet of the C Corp. Now, when you want to bring that money back to India, you again have to pay the dividend taxation in India. You will see some withholding in the US while you bring that $800,000 back to India. But you have to report that as a dividend income in your Indian taxes, offer that for the dividend income taxation according to your whoever you are, as an individual, as an Indian company, as an Indian LLP. So there is a double taxation as a very big red flag, and not a red flag, but a very big cautious point you should consider before opting the C corp. So that's why I said, if your motive is for profits, if you want to earn profits, don't fall in the trap of double taxation. Just simply go through the LLC. But if your motive is to get the investors on board, to burn the money, to create the value, then C Corp is the right structure because your motive is not the profits here. Fourth option, S Corporation. Mind you, this is not for us. All right. This is for the Indian founders who are the US residents. So ideally I should have, opted out or deleted this line item. But I wanted to give you a scenario that if any one of us right now is a US resident Indian founder, then S Corp is the structure or is the option you can opt for. Okay. You have to evaluate this very carefully while you opt for this. Last option or the last entity type what we can have is the branch office. I'll give you an interesting story around this. So I was consulting Indian listed company for their expansion methodologies and all. So they were quite happy in presenting me their structure, what they're following, what's the supply chain and stuff like that. Okay, proper boardroom meeting. They said they have a branch in the US and it's working beautifully for them and they are growing crazily and they're very happy about that. I said, boss, you're in the wrong zone right now. Okay. Branch office is the structure you should never follow. You should never have followed this. Okay, you can, try this for maybe, for a smaller reason, like you just have a US contract or you just have a small US contract you want to fill in, you can have a branch office as a solution, but not as a long-term strategy. Why I said that to them is one is the liability. Okay, so US is a very legal heavy country in terms of that anyone can sue you anytime. They can, and then the repercussions can be in multi-million dollars as well. So having a branch office, what this Indian private limited company is doing is they are exposing themselves for all the liabilities they might occur, they can occur in the US business. So ultimately the Indian private limited company is responsible for any liability coming onto that branch office. A big thing. But if they would have gone through the CPOP structure, they would have blocked the liability in the US itself and not have exposed the Indian parent listed company for whatever liabilities that may have come or can come in the US business. All right. Second important aspect, BPT. Okay, branch profit taxation. Again, it's a double taxation. And on overall it might eat up the profit up to 30 to 40 to 50 percentage as well. Obviously you have to be very specific about the case, but BPT is again big red flag having a branch office. So if you're having a either a large company back in here in India, have a small contract US, small obligation, business obligation in the US, you might get into a branch office thing. But if you're looking US as a long-term strategy, branch office is a big no. All right, big no. So see what happens is, as I told you, Single member LLC is a disregarded entity. It is sort of a proprietorship. So whatever income you are earning or whatever, so I'm saying you are earning, I'm not saying the LLC is earning. Okay. So whatever income you are earning in the US through your single member LLC, you have to report here in India. So there is a concept called ECI, non-ECI, FDAP. I'm not, so since you asked, that's why I'm going one step down here. So ECI is effectively connected income. Non-ECI is non-effectively connected income. FDAP has, again, a different sort of, you can say, the dividend, the interest, the profits, all sort of that. Okay. So in this case, ECI, non-ECI is a thing what you need to take care of. Now, if it is a non-ECI income, US will not ask you to pay the taxes on this. But Indian government will ask, boss, this is your income, personal income. You have to report on your income tax return, generally under the schedule of business profits. Okay, so we have 5 heads of income to be reported in India. So you have to report this in your PGBP head in your Indian income taxes. But if it would have been an ECI income, effectively connected income, then the single member LLC has to pay, and you had to pay taxes to the US government as well. Reported the same income to your Indian government and under the Indian income tax returns, and utilize the taxes paid to the US government as foreign tax credits here in India. All right. So this is what you should have done, you should do, and look around in your taxation reportings in India as well. So in nutshell, yes, you are required to report your single member LLC's income in India, irrespective of the fact you withdraw or don't withdraw.
So there is a follow-up question by Jaideep ji. So he is asking that so we need to get the tax audit as well done in India for this business income.
It highly depends, Jaideep ji, because see, as a overall scenario, there are two options. Either you report in PGBP or you report in the other sources head. So if you're reporting in the PGBP, yes. If you're reporting in the other sources, no. But my answer is not clear right now because I would require to, check more facts to give you a precise answer. So it is better you consult your Indian CA that whether the tax audit is required or not, in which head I should report this or not, what are the pros, what are the cons. So you have to evaluate this personally.
There is one more
Yeah.
question by Mr. Vijay.
Mhm.
He's asking that
Mhm.
can directors of the Indian company be the partnerly
Mhm.
of the US LLC subsidiary, or should a US
Mhm.
citizen be onboarded?
You can be the officer in the US LLC, irrespective of the fact that whether you are director or not in the Indian company. Now, there is one more misconception. What people have in mind is that you general like entry level guys, we need a US visa to be a US shareholder or US officer. That's completely wrong. You don't need anything, the US visa or stuff like that, to be on board of the US LLC or the C-Corp. Secondly, do we require anyone as a US partner who's a US resident? No. So generally, because people understand Dubai more than the US, and Dubai had a requirement that you have to be a partner with a local Emirati. There is no such requirement in the US, sir. You have to appoint, since you are a non-resident, so you have to appoint a registered agent who will, work as a communication point between you and the US government. But you will not need any sort of US visa, any sort of US national resident support, or anyone from US to be on board of your US company. You can simply own that US company. You can simply be the board officer, anyone, CFO, CEO of the US company. There is no blockages here. So these are the risk mitigation and the common pitfalls. So I can't, cover everything in this, as I said earlier, but I have tried my level best to give you, a window wherein if you are doing anything wrong here, you should take care. Form 5472 not filed. This is the biggest mistake people do, and it is very costly. Single 5472 miss kiya apne, you will have a penalty of $25,000 per form. Applicability and all, I'm not going in depth of that right now, but I'm saying check if 5472, 5471 is applicable to you. Have you filed that? Have you filed that correctly? That's a thing to give it a shot. So definitely review this. All right. Secondly, F bar FinCEN Form 114. If the US entity is owning any Indian bank account or any bank account overseas to the United States, and the altogether the total balance is more than $10,000 at any point of time, you should have reported this F bar form. All right, FinCEN Form 114. Mind it, this is filed additional to your federal tax return. So this will not go as a tax return part. This will be filed separately electronically. All right. And one more thing I want to tell you, India and the US government, or most of the countries, shares their financial information with the United States, exchange their financial information with the United States under the FATCA agreement. So let's say if you have done any financial transaction in the US and you say that I don't report to the Indian government, that will not happen. Ultimately, that information will flow to the Indian government and they might come anytime to you. The same way works for the United States as well. US entity is having anything, outside the US, you don't report it. No, they will have the information through the FATCA arrangements. All right. Second most important point. Third, major missing. All right. ODI not filed with the RBI. Generally test the waters to, start the conversation, to start the business. People, set up their entities overseas to India and forget about the ODI filings. ODI filings are mandatory, boss. My friends, don't miss this. Why don't miss this? One, you will not be able to bring back your money back to India. So whatever profits lying in your overseas entities will remain there. Whenever you bring back to India, you will not be able to do that because AD bankers, the bankers will block this money and saying there is no outward transaction, there's no outward investment. Then what is this profit? What is this dividend for? And I have seen in my case lot of IT guys, IT people. I'll not say lot of, but one of our customers missed reporting the ODI for their multiple overseas entities. So we worked through them. We made sure that their ODI reportings are parallel, are done correctly because they were looking to list themselves here in India. So just imagine the risk. You will not be able to do the listing. You will not be able to raise funds. You will not be able to bring back your profits if you don't do the ODI filing with India. So that's very important because see, generally people feel, okay, I'm doing everything right in the US. Why should I be worried? No, boss. India is the first step for you. You are residing in India, so you have to make sure that India is also done correctly. Fourth, the R&D payment trap. So there is a act which Mr. Trump passed, OBA, one big beautiful act. All right. So there's an R&D payment trap. So whatever payment the Indian parent is receiving from the US entity, they might club this or might it as a R&D expense to claim the R&D credits back in the US, or they should bifurcate between the R&D expense and the general admin, the management fees expense. So this is very important aspect. Just to take the R&D credits in the US, you can't blindfold everything as an R&D expense and claim the credit. So that is very again important point. People generally do it incorrectly in the US. All right. Fifth, sales tax nexus. As I told you, US is a union of 50 different states. Every state has their own sales tax provisions, act, registration, tax rates, return filings, everything is different. All right. So let's say if I am selling through Amazon across the US, okay, and I have an arrangement with the Amazon that Amazon don't need to, file the taxes on my behalf. I'll be the responsible person. In this case, if I'm selling across 50 different states and I'm above the threshold limit, I would be required to take 50 sales tax registrations, file 50 different sales tax returns, pay 50 different states the sales tax amount. So this is a very important aspect that you should always, on a monthly basis, on a quarterly basis, on a 6 monthly annual basis, should evaluate your nexus with a particular state. So that's again a very important aspect. Sixth is exports proceeds. So let's say if to manage the taxation and stuff like that, what generally people do, bill from India to the US entity. Okay, so Indian entity has billed for the export proceeds to be received from the US entity, but they don't make the actual transfer from the US to India. RBI requires, the FEMA requires you to receive the foreign exports or export proceeds within 15 months. Okay, earlier it was 9 months and it was changed in the November 25. But don't miss that you have just billed to manage the profits, but you are not bringing back that money to India. So that's again a pitfall generally people fall for. Okay. Seventh is the PE trigger. As I told you earlier, PE and POEM are things for the companies, the big companies having good ticket size of revenue. So this evaluation is required for them. Lastly, BOI filing missed by the Indian parent. So like the third point, wherein the India is requiring you to file whatever money going out of India as an investment to the overseas entities. The same way, US requires you to file whatever money or investments coming from outside of the US. It would be a FDI. So foreign direct investment reportings are there in India, that whatever investments you are receiving from the foreign, you have to report to the government of India. Same way, the US government wants whatever investment the US entity is receiving from outside of the US, you have to report under the BOI filing. So this is also generally people miss. Obviously, there are some exemption, limits are there, but exemption filing is also required under the BOI. Because whenever, see, the first timers, whenever I say that, boss, you have to file the BOI to the US government, they Google it and they come back to me, or they ask ChatGPT and come back to me that this is not required. See, this is saying that, Mecca, no, boss, even if you are below the threshold limit, exemption filing is required and mandatory for the BOI. All right. So don't misinterpret the laws and don't miss these common 8 things what generally people miss while reporting their US compliances, India compliances related to the US entity. So these are the FEMA or RBI compliances, the Indian side compliances, which needs to be taken care of, and you should be mindful about that. But one common or one general misconception I want to discuss as a red flag is the owning via debt or safe. Okay, so safe instrument. So if you must have learned or read that this entity has raised funds $20 million through SAFE. Okay. SAFE is simplified agreement for future equity. Okay. What does this means? That in nutshell, you are raising a debt. The US entities are raising a debt. So if you have any US partner, okay, or if you are looking to collab or partner with a US business, don't go via SAFE route. Okay. RBI says, FEMA says that if you don't own anything or don't own equity in the US company or overseas entity, you cannot give them a debt. So generally, people, let's say I am Amit Agarwal, I have good amount of money, and now I want to be a angel investor, okay, and I want to invest in a US company. The US company is raising funds through SAFE. Okay, can I invest? No, boss. No, you cannot. Why I'm saying this? Because you don't own any equity in that US company. So how can you give a debt via SAFE to that US entity? Okay, the RBI blocks that, the FEMA blocks that. You will not be able to bring back your money back to India. All right, people make the payments using through the LRS limit, through their credit cards and stuff like that. These are the wrong things, should not be done, should be avoided. Rather than being an investor, you become a victim of the avoidance of the knowledge, the absence of the knowledge. So take care of this FEMA or the safe route. All right.
What is the scope of collaboration for non-IT engineering sectors like energy, renewable sector, semiconductor, and telecom, sir?
As per my experience, there are a lot of guys who are working for the semiconductor industry, for the solar industry in the US. What are they doing? They are giving their designing services from India. They are giving their technical expertise from India just by sitting here in India. So it is a very important thing you can do. There is basically a lot of things you can do in this semiconductor industry by consulting them, guiding them, designing, review of the designs. These are all sort of things I have seen till date for the semicon industry.
Sir, last question. The last question is how to explore US market, how to connect with CPAs for alliance, and how to get directory for the same.
Okay, so one of the CPA sitting with you guys, you can connect with me at a time. But having said that, there is an iris, just like there is a iris body is there. Okay, internal revenue sources. So they might have the CPA documentary. Even I have not yet explored that. You can Google them. You can. I think there is something called Yellow Pages in the US. You can refer that. That will give your answers. And for the collaboration and stuff, you have to reach one on one to these guys. In fact, India has a lot of CPAs working for this domain. So this India US domain is beautiful, and there are a lot of CPAs working on that from India as well.
So one last request from our side, if you could let our participants know about what USA India CFO and you are solving together, sir, and a little bit more detail about USA India CFO so that they could connect to you directly if they have such kind of needs.
That's my best part of explaining myself. So we are 6 partners as of now in the US India CFO. We are headquartered in Palo Alto in the US, having a branch office in New Jersey. In India, we are headquartered in Mumbai, having branches in Hyderabad, Bangalore, Ajmer, Rajasthan as a back office for us. We are currently 125 team size right now. Our domain expertise varies from India, US, and Europe. Europe is a recent addition to our service bouquet. So, and then we take care of everything. So, our legal name is BNG Advisors. B stands for build, N stands for nurture, G stands for growth. If you want to build something, we are there to consult you, execute for you, registering the companies, structuring the companies, everything. Nurture means that you are doing the business and you want the regular support of compliances, payroll taxes, sales taxes, bookkeeping, audit, and everything. And G is for the growth. So if you wanting to, expand, do your structural, as a structuring from a global aspect, that you are in multi countries and you want to structure your business supply chain. If you are raising funds, we are there to help you out for your valuation needs, for again, how to onboard your investors and all. We are there to support as an IP, intellectual property, maybe trademark, maybe patent, maybe copyright. We do everything. Plus, we have a lot of things to offer, not in-house, but through our associate partners who are there across the globe, supporting the niche, anything you require. So we are sort of, term ourselves as a one-stop solution. Whatever we do best. What we don't want to do, what we don't do best, we have good associates with us who are there to support you guys.
Thank you so much, sir. Thank you so much for joining us today and for the session that you have delivered. It was a highly nurturous and very informative session that I could firmly believe and I can see. And it will definitely help our members, the participants who have joined today. Thank you for joining, guys. And it's been a great journey that you have taken us today, sir. And looking for more engagements in the future, definitely, sir, we'll get back. And one more request, sir, if I could ask, I would really request for the PPT because it was really informative. And thank you so much for it, sir. Thank you so much for joining.
Absolutely. Thank you very much. My pleasure, and I'll be there to help our Indian friends, government of India, and I would love to collaborate more in future to share my experience, more insights and stuff like that. So absolutely wonderful. Thank you very much, guys. Thank you for having me here.